Good day, everyone. This is Patrick from EasyFX Code Trading System, and it's Saturday, the 5th of August, 2023, and it's the weekly technical analysis for spot gold and dollar yen for the second week of August. And as we look at spot gold, it has been still turning down and retracing lower, breaking the lower trend line on Wednesday, but managed to recover on Friday with at expense of US dollar as the non-farm payroll report came out lower than expected. And that gave a boost to the other major pairs and spot gold as well to just climb back into the above the lower trend line and back into the descending wedge. And likewise, for the dollar yen, it has been continuing its bullish momentum until almost hitting the 144 figure, and then turning back down on the Thursday and falling further on the Friday back into the 21 fib retracement area, back just below the 142 figure. Let's take a look at last week's news and key drivers and look ahead for this coming week with US CPI figures looming. Last week's main news basically came from the two central banks, with the RBA and the Bank of England. While the RBA did not raise interest rates, which surprised the market and drove the already lower and weakened it further. While the Bank of England also followed the ECB last week and also raised interest rate, but also could not maintain any strength and continue to weaken from last week as well. Until Friday's US non-farm payroll report, where it came out lower than expected and gave the market a glimmer of hope that perhaps the Federal Reserve could pause in September and collect more data, especially this coming month. And this coming week will be a key one with the CPI figure. So that's going to be a key indicator for the Fed to look out for. But the market is forecasting a slightly higher than expected increase in CPI over July. And similarly for PPI on the Friday as well. Perhaps it did dip down below for the previous month, so they're expecting a slight adjustment. And Friday, there was also the UK GDP, so they're forecasting a slight positive performance, slight growth compared to the previous month. So we'll see whether how these will impact the US dollar and against the major currencies for next week. All right, let's move back to the analysis. Let's begin with spot gold. And with the start of the month, it has been retracing lower and dipping into the support zone, breaking the lower trend line on Wednesday, and attempted to dip even lower on the Friday until the non-farm payroll news came out, and managed to bounce back up, back above the trend line. And let's move this away here. Attempting to climb back up to the 1950, but haven't quite reached there. So this is still going to be, instead of support now, going to be interim resistance. And this zone here is still a valid support zone, just around the 21 fib retracement. And there's a major resistance zone above at the 1975, which has fallen through towards the end of last month, and that's where the upper trend line is as well. So it will have to test that before it reaches 1975 if it's going to get through. So we'll see whether there's any momentum to carry this further up towards the 38 fib, or whether it's going to eventually break down and fall back down towards the daily 200 EMA. And it's critical on the US news this week, the CPI, and then followed by the PPI. Okay, so next major resistance is still above major support here. Let's take a look on the weekly time frame. And yes, even though it managed to climb back up above the trend line, it's still a pretty large spinning top. So it could just consolidate this coming week, and we'll see which side it's going to break up from after the CPI news. So it's at critical levels and struggling to find support. And we could add the additional interim resistance at the 38 fib, just below 1965. Okay, let's compare this with the US dollar index for last week, the DXY. See whether it's inverted or inverse correlation with this spot gold movement. Here's the US dollar index, where it managed to climb all the way back up to retest this previous trend line that it broke down from. So it has climbed back up to retest it, and then was rejected and pulling back, and especially on the Friday with the US non-farm payroll data, which came out lower than expected and fell back into the resistance that it broke out from. So it has recovered quite a bit over the last few weeks, and let's see whether it's able to resume after a retracement. And key will be this week's CPI and PPI data. Let's take a look on the weekly time frame. and turns out to be a spinning top, and after testing the rising trend line and pulling back. So there could be consolidation within this upper wick here for next week. So this is now an interim support, and we'll likely move this up here as a significant resistance now at the 62 fib retracement. $101 is still interim support, and below that the key support will be at the 138 fib. And we'll move this interim support here at the swing low. At this 100 fib. So we'll see if there's a further retracement for this coming week, and whether it's going to find support at the 101 and attempt to climb back up. Now we can also there is also another trend line that we can add down here, which seems to have been tested. Right, and we'll see if it's going to be able to climb back up above the 102 and break above that to attempt to reach the 62 fib. So this could also be an interim resistance here at the 102 and the 78.6 fib retracement. Okay. All right, there's some key support that needs to hold, and we'll see if there's able to break through higher. So right at a critical area for this coming week. All right, let's move back to the other pairs. Okay, let's move on to dollar against Japanese yen. After a strong bounce at the end of last month and climbing up towards the 144 resistance zone, just fell short of that, and before turning down on Thursday. So that's still going to be a major resistance there. And it's fallen back to the 21 fib area, just below the 142. And perhaps hitting down. If it retraces further, then it could target the 140 round figure. Let's see how strong the retracement and pullback is going to be. Then the next major support is going to be likely at the 38 fib with this lower trend line. for support. Okay, so there's a lot of support zones below the 140. Let's take a look on a weekly time frame. And there's a long upper wick, and could be some consolidation this coming week. And yeah, it could struggle to climb up higher, and there should be some support, so could be just consolidation. And we'll see how much the impact is from the US news. All right, so let's see how far this retracement will bring the dollar yen down to, but seems like there's going to be strong support, perhaps even at the daily 55 EMA, just above 140. Okay, so do check out my other videos on the other major pairs, and have a safe week and a good trading week. And cheers for now.